Hi everyone, welcome to the Open Dairy Market Update. In the beginning of the week, many different opinions about the market were floating around, and it was hard to make sense out of the direction. Ultimately, the slow demand and supply pressure from the US forced the market to take a step back on both fat and protein. Also, the European Central Bank decided to raise interest by 0.25%, whereas the Fed held steady, resulting in a stronger euro. Last week, we noticed all eyes were pointed at the US price developments. The trend in the US for most products is bearish for different reasons. The whey spectrum is suffering from a lack of feed demand in Asia. Cheese is produced supply-driven, and NFDM has not been really competitive the last few months. Will the stronger euro change this dynamic? The last few months, we have seen many reports about US supply pressure and stocks, especially cheese, piling up. This would normally result in a better availability of NFDM on the world market. But the NFDM fails to break support levels every time. We would expect it to plummet. If we look at the major markets for EU SMP and US NFDM, we see large differences in the dynamics. The largest buyer for EU SMP is Algeria, whereas the largest buyer for US NFDM is Mexico. It's interesting to see that the exports to China from the EU are lagging, as China used to be the largest customer for EU SMP in 2020 and 2021. Algeria has been showing really strong import figures. The big question is whether these volumes are consumed directly or we see some stockpiling going on. Demand from Mexico remains resilient, with an all-time export record in March NFDM trade. It seems like Algeria has been keeping the EU SMP market clean, and Mexico has been doing the same for NFDM. But we could see an interesting dynamic going forward. Because when we compare Mexico to Algeria, we find that Mexico is a much easier customer to serve. Where Algeria has a shelf life requirement upon shipment and specific test requirements, Mexican buyers don't really mind about the age of the product and usually buy standard specification. So why could this become important? Because the carry game played in the US and EU might turn out totally different. US players who have older hedged product in their warehouse could sell this very product to their number one customer, Mexico. EU players have a problem because the product will be too old to ship to their top three markets: Algeria, China, and Indonesia. This could result in more sales pressure from Europe, not necessarily for the fresh exportable product, but expectedly for the older hedged product. The basis risk of an European hedge might turn out to be higher than the US variant. We see some demand appearing for Q4 shipments on the world market. It seems global buyers are working through stocks and suffer from a decline in consumer demand. The return of these buyers will coincide with the lowest point of production in Europe and the US. We believe fresh SMP will trade at a steep premium compared to the older product as export customers need to be served. This could be a nice opportunity for New Zealand to take the lead in serving the Q4 demand revival with fresh SMP produced in their peak season. A lot to keep an eye on, but it seems we're not far from a battle for the world buyer of SMP. Thank you for your attention. We welcome your comments and remarks.